Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, as well as the markets that have an influence on the precious metals. And without further ado, I'm going to hand the mic over here to Miles and get us started with what gold is doing, not only in the past week, but your predictive future trends.
Yeah, gold continues its kind of short-term consolidation sideways, although we are seeing a stepping up pattern. My gut still tells me that we are going to see lower gold prices, especially coming into later this spring, but that's probably a month or two out, at least at this point. Still holding on for a little bit of a reversal down in gold before we probably take that next leg up. And I think we probably will this year see higher pricing going into, or at least prior to the election. But we are talking a number of months out from now. So a little bit of movement down, followed by maybe another step up late summer into early fall.
Yeah, I'll honestly admit, in my end-of-year client letter to all my clients, I did state that I thought that in the first quarter we would exceed $1,600 an ounce. And unfortunately, I feel like that was sort of taken from me by the Iranian missile issue, because we did
but
exceed
you weren't
it.
wrong.
I wasn't wrong, but it wasn't for the right reasons. You know what I'm saying? But technically we hit there, and now I'm not wondering if we're not starting to run a little bit out of steam, because I thought that we would have a real strong quarter, even April. And now, just subjectively, I'm not convinced. So for these charts to sort of support a little bit further downturn doesn't surprise me with what I'm kind of sensing.
Sure, but those initial pushes, for whatever reason they happen, whether they're political, economic, or just traders in general, you've still got lines in the sand. You've still got sell orders that are sitting at those prices that get taken out. So it doesn't matter why it happened. Those first attempts to break through a pretty strong $1,600 double zero price written in the sand from years ago. Who cares why it happened? You took out the first line of defense on that move, so there'll be less there to stop it the next time it tries.
Yeah, and I still think that we'll go flirt with that 1650 key figure at some point this year. I'm not saying that when gold turns down in the spring, and I don't think I hear you saying this either, it's not down to stay. We're just saying it's going to take a pause before we resume a rally, because we're in a bull market trend right now, correct?
Right.
So it doesn't matter when that happens at 1650. It could be in the fall. I certainly, if you get a Trump loss in the fall, you would see gold rally big time, right? It could even come then. But anyway, let's keep on going on your chart here.
Sure, you would certainly think so. And hear me correctly, I'm hoping for a pullback. I mean, anytime you're in a long-term trend, you want a chance for the market to take a break, because when you get those breaks, you give the market a chance to reload and reestablish that trend even further. When prices go parabolic, that usually means the end of a market move. So the fact that gold is trading sideways, hopefully pulling that drawstring back on the bow to shoot the arrow another time and push the price even further. So moving over to silver, you see kind of the opposite compression down. As gold was compressing back up to that January 1610, 1615 number, silver, on the other hand, it never really got back up to the early fall highs, August, September, and we've been compressing down since then. So usually when you get compression specifically in a direction, you're looking for that reversal point. And I think silver is on the way down. If we get down another 50 cents in silver, there's really nothing stopping it for another $1 or $2 down from here. So I'll throw this on the chart, kind of where my reversal point is on silver that I'm looking for. But we could see that actually stepping out in front of gold, where silver may hit a reversal point prior to when gold does. Because, we've been talking about this for about 6 months now. Eventually, platinum and silver start stepping in front of gold and palladium.
Leading the way.
Exactly. Just from a trend shift standpoint, as those metals are going to play catch up just ratio-wise.
Yeah, even if you don't remember the price, all you have to do is look at the ratio. So you're right. If it leads the way on the way down, then you're going to see the ratio widen, and we've seen that here. We are just a hair under 90-1 today. And so, we had narrowed it all the way down into the high 70s in 2019, and now we reverse back up to 90. So if it leads the way and it gets the drop that you're assuming it will, we're going to go right back to that previous high of around 93-1 in the ratio. So regardless of what the spot price is doing nominally, just look at that ratio, because that's where, for us, the value lies even more so in the undervalued metal, that being silver.
Sure, and those reversals, especially like a ratio reversal, when you have a trend going a direction, a ratio compressing or a ratio expanding, that tends to be pretty consistent. But when you see this type of volatility where we're 90 and then we're 80 and then we're 90 and then we're 75 and now we're 90 again, when you see this expanding volatility, there's a fist fight that's taking place between the two markets, and it's a pretty decent likelihood that we're going to see that ratio reverse and see silver start rising faster than gold.
What about platinum, since you mentioned it?
Platinum's at a breakout point. Platinum's been in a very tight compression with a very distinct floor. And that floor has been tested a number of times here. I like where it lined up. It lined up with a high point back in December. We've had multiple touches along that floor, and we have just sideways wedged right into the point of it here over the last week. Platinum's going to make a decision here in the next 2 weeks. Palladium, on the other hand, sort of looks like platinum, just the opposite of it, but palladium has a pretty beautiful chart here to where you've got some sideways compression up. We're also pushing into the end of that. That's coming off the high point again from January, mid-January, and then some low points there, end of January into February. Palladium going all but parabolic over the end of last year and now showing a little bit of sideways movement there as well. So I'd like to see palladium take a nice, aggressive, healthy reversal back down. When you go parabolic, you've got to see some volatility. I'd love to see some volatility in the palladium price.
Speculation and supply and demand, and you'll see that type of activity every time.
Right. I don't know where I stand on the supply and demand with palladium. I think it's all speculation.
So with all this talk about potential price drop, for the existing precious metals owner, that may sound a little bit negative, but actually these are wonderful opportunities. Again, we look for value. We look for opportunity to step in and add to ounces. It's all about accumulating over time and remembering that from a retirement standpoint, it's about how many ounces you own. And can you ratio trade to accumulate on your way there? Yes, but sometimes it takes new money. So step in on those opportunities, on those dips and those pullbacks. That being said, too, let's do a brief recap as to why we own the physical precious metals. One, it's not a paper promise. Nobody can claim that you don't own what you own, right? Two, for fundamental reasons, inflation is like death and taxes. It's guaranteed over our lifetimes. And so the general trend in the gold price is always going to be up as long as we have this Keynesian economics approach to things. And three, geopolitical uncertainty and strain. Certainly you can say currency weakness, and we're killing the dollar right now. Every fiat currency is being killed in a slow death, and ultimately you see it go parabolic, much like what you've experienced in Venezuela lately. But I would say, look, the dollar relative strength is a facade. Even Powell, had this testimony before Congress, and he said these debts and these deficits cannot be sustained. It's taking away a key tool for them in response to a crisis. So if we see another economic recession or depression or crisis, you can't be already in $1 trillion a year deficit spending mode. So if the Federal Reserve is going to shrink its balance sheet and try to pause on the QE like they say they are and get responsible again, they feel like there's been some stability in the repo markets that by April or May that they can start to unwind that. Okay, we'll see. But if that ends up being the case, you still have to control the debt. And there's no signs or indications that that's the case. That's another reason why you own gold.
Yeah, and you bring up the market and you bring up some of these potential market strains, like the Federal Reserve coming off of one of the biggest spending sprees in history over the last few months. It's real easy to quit smoking right after you just finished your last cigarette. Wait an hour or two and see what happens. So same with the coronavirus. I mean, the Dow continues to climb. Dow doesn't seem too concerned, at least here stateside. Now, maybe if we saw a breakout here stateside, that obviously changes things pretty quickly. So as the Dow continues to climb, now I think a fair bit of that news does come off probably the biggest winner this week. So we definitely have to congratulate, coming out of the New Hampshire primaries, the candidate who received the most number of votes out of the New Hampshire primaries was, in fact, Donald J. Trump, which I think everybody found kind of interesting as the returning incumbent beating out any of the specific Democrats. With that news and the expectation that the Trump economy is going to keep chugging along, the Dow continues to roll upwards, and I'm targeting somewhere in the 30 to 31 range. I really think we're going to see it over the next few months, and I think there's not just some opinion there, but there are some lines on the charts you can draw that takes us up to that pricing.
Well, you're less than 1% away. And we've been calling for that for a while. 30,000 will be great news, and you'll see a little rally after that, and then we'll see. But there are indications in the market that GDP is about to turn down. All signs point to the fact that it is turning down. So I would say if there's any way that Trump could speed up the election and move it to July or August, that would favor him. But we'll see how the timing plays out for him.
I don't think it works that way. Yeah, and again, we'll see how that plays out. If the Federal Reserve does decide to curb some of its QE packages, if we see an immediate correction down in the Dow, I think that just adds more leverage to our argument that there is no real money going into the markets right now. You are just looking at leverage borrowed money that's propping these markets up. And the fact that gold is holding strong is indicative of that truth. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you joining us each week in YouTube, in the comments, hitting subscribe, clicking bells, doing all the YouTube things. If you have any additional questions, you can always head over to our website, McElvaney.com, Twitter @ICA Gold, McElvaney Financial on Facebook, or give us a call at 1-800-525-9556.
Thank you so much, and have a great week.